you're hearing Scott Bessent go out. He's talking about the U.S. The term he's using, I know he's, part of his job is to be extremely adept at, managing capital markets interactions, stewarding the public treasury. My opinion, he's doing that well. But another part is messenger, right? So you see him going out after Davos. The term he's using, what he's pitching the public is Bountiful 2026. And what he's describing here is a non-inflationary economic boom. When he says non-inflationary, he doesn't mean it in the Austrian sense. Like a lot of the audience might know this. Like when we say inflation, if you're actually using the true monetarist definition, what you mean is an expansion of money supply. What you look for that as an expansion of commercial bank lending and credit into the real economy. He's not saying non-inflationary in that sense. So I think what he's looking for is banks to be able to do that balance sheet expansion, create more money. But what he's saying is there's actual real economic growth in the U.S. And productivity taking hold, so that credit expansion is actually going into projects that are economic, like the opposite of malinvestment. So I think, yeah, that's what we're seeing. We talked about the signals. If you go back to Dow Theory, you see the industrials in the U.S. breaking out. You see the transportation sector joining it. Despite the volatility, since basically Davos, those trends remain intact. So all of this core policy that this administration has, really pinned its hat on for its first year and track record, talking about revitalizing Main Street, re-industrializing America, providing real economic growth in the U.S. economy. Those things are all happening, in my opinion. If you look at the market indicators, you look at the data, those things are taking place. It's a messy process, and there's a lot of blackpilling out there, but that gives you the ultimate backdrop that allows, you talked about Japan plus the U.S. Being enough, right, to get through the whatever comes out of this Japanese, life insurers, mini crisis that we're talking about potentially unfolding. The U.S. economy is your like secret weapon. Like that is what gets the job, allows us to get the job done, in my opinion. So keep watching that. 2026 will continue to shape up very interestingly. I'll just leave a little bit of a nugget here. Talked about the dollar sell-off, right? I've got some, call them analysts on X, Twitter, who have been very spot on in terms of the big picture, like generational type moves, and gold, silver, the dollar that we've seen play out over 2024, 2025, and going into 2026. I've seen some voices that I really respect recently start to call out, hey, this move in the dollar, we talk like very widely noted here to start the week. It broke below the post 2008 bullish channel that the dollar was in versus other currencies, mainly the euro, which makes up half of the index. One of those analysts called out that, hey, this break, just looking at all the technicals, prior consolidation levels, all of that takes time and actual talent to be able to make those calls. They mentioned watch for this breakdown in the dollar to be the false, or in the DXY index to be the false move, which means basically the first instinct of the market is to sell off the dollar into the developing news. False breakout would mean, all right, you break, but then it turns out, oh, market got that one wrong. Sorry, bears, you didn't actually have the tug of rope. It's like Popeye eating the spinach, and just discovering that instant strength. Market pulls the other way and the bulls take it the other direction. That would basically be the scenario that this analyst was calling for. And for that to happen, for the dollar to reverse like that, what you would need to see is a weakening of the euro, which is a different setup than fundamentally the reasons and mechanisms by which Scott Bessent and the large banks and the U.S. have been kind of coordinating the dollar to be weaker and also marking up gold. A sell-off in the euro against the dollar, in my opinion, like a true breakdown, would be a different story than what we're seeing with, say, the dollar structural weakness over 2025 and going forward so far in 2026. That leads into the stories we've been talking about on prior episodes of the weekly roundup as the euro financial direction kind of narrative unfolds slowly. We've seen stories, after Liberation Day, April 2025, you saw kind of a renewed vigor in the headlines
Right.
from ECB officials like Christine Lagarde. Hey, we got to get the digital euro out. We got to launch this new savings and investment union. And in my opinion, you're seeing all the signs of kind of desperation, especially in their interviews at Davos that we started with last week. There's going to be a big monetary transition as well that the Eurocrats see coming. They've been planning for. But in my opinion, if this analyst I talk about is correct, like he's calling for the false move in the DXY, what that means is a breakdown in the euro, structural crisis. That's where the rest of 2026 could be very interesting. So, point being, this is probably going to be a big year in terms of monetary history. We hope you're here to enjoy it with us and buckle up. This plot is going to get interesting.